Hi there, this is Daniel Jacobs with TruLoan Mortgage. We're happy to have you with us tonight for the Home Buying for Homeowners, Real Talk About Moving Up. We've got a great panel with us tonight, and we're happy to be doing this virtually. Normally when we have these events, we like to do it in a really fun place like a brewery and just get to mingle and talk, but during these times, we're doing it virtually, and we will share the video with you afterwards. And you're welcome to share this with friends and family as well that may benefit from this. I'd like to introduce our all-star panel here this evening. We've got Tiff White from the Andy Bovender team of Allen Tate Realtors, one of the top realtors in the Charlotte market. We've got Ryan Lance from Ribbon, who's one of our sponsors for this event. We thank Ryan for being here. He's got some great insights for us. We also have the co-founders of TruLoan Mortgage, Matt Wise and Brenda Jarvis with us as well. For anyone who, and so the whole real reason we're here tonight is talk about this homeowner's dilemma. So really, a lot of folks are asking, how do I sell my current home before buying my next one without getting stuck with no place to live on moving day? We don't want to have to move twice. And with the market heated up the way it is, it's a little confusing of what to do next. And so we're going to really talk about that. We're going to dig into 6 proven strategies to make this work. Before I do go to the next slide, I want to say that we are offering some really special incentives for anyone who wants to take that next step to learn about the market analysis of their home value. We're offering a free market value analysis of your home. If you schedule a time with us at TruLoan Mortgage to get pre-approved to determine what that move up buy is going to look like, and what you can afford and sort of what that payment would look like with today's historic low interest rates. If you schedule an appointment by Monday, at the end of the day, that doesn't mean have the appointment. It means just go into the calendar and choose a date that will offer a free appraisal credit off of closing costs up to $500 for whenever you do buy, whether it's next month or next year, it doesn't matter. And in addition, everyone who goes through the pre-approval process, we want to continue to support our local businesses, the local breweries that we would have been at if that was in different times. So you're going to get a $50 gift card from Legion Brewing. So you can go there, socially distance with a friend or a loved one and enjoy it on your own time. So hopefully we'll be able to meet you there again in the not too distant future. So watch your email for that sign up afterwards. So let's just dig right in, okay? The market's hot, we know this. We're gonna get some really great expert feedback in a few minutes from Tiff and the others, but let's just talk about this V-shaped recovery we heard so much about that we wanted to see when everyone went on lockdown at the beginning of COVID, right? We all heard, oh no, the economy's locking up, we're closed down. And are we going to have a V shape? It's going to be a W shape. All the pundits on TV, well, guess what? There is one area that we have in the Charlotte market, a very clear V-shaped recovery, and that's for housing. If you look at the right side of your screen here, you're going to see right around the spring when COVID hit, you see this dip in the median list prices. And then, boom, it just boomeranged right back up. And it went up way higher than it was before the onset of COVID. So you can see those listing prices. This is list price. We're going to go to sales price in a minute. 10.9% lift. Now, folks, this is not national. This is the numbers for the Charlotte metropolitan statistical area right here on our own backyard. So you can also see where that list price went up in dollars, right? So percentages and dollars. The next slide I've got here really demonstrates this in the sale price. Remember, the listing price bounced up 10.9%. The median sales price has gone up 11.1%. What does this tell us? Houses are getting in bidding wars and they're selling for over ask. So you can see the market's hot, it's recovered, and it's doing well. Now, how long does it take to sell a house. There's really 6 degrees of separation. Kevin Bacon's not involved in this, but it's 6 degrees of separation from selling your house, okay? Because that's all it's taking. That means from the day you list your house for sale, assuming you've got a good realtor who's advised you really well for the appropriate value, you put it out on the market, it's market ready. Whereas a year and a half ago, it was taking over 30 days to go under contract. And at the beginning of this year, it was taking 28 days in January. We're down to 6 days. We're down to 6 days on average it takes to go from putting it up for sale to having a contract in hand. And oftentimes that's an average. A lot of houses are going the same day they go up. That's how we're getting that crazy 6-day average. And this really is an indicator of what the Charlotte Business Journal reported on October 12th of this year. And the headline was, "Things are booming. Canopy Realtor Association president talks about the state of Charlotte's housing market." I have pulled a little a cutout from that article. It says here, our overall inventory is hovering at record low levels with just almost 5,100 properties on the market. That's a 1.1 month supply. What does that mean when I say a 1.1 month supply? That means based on the number of houses being sold in a month and based on how many houses are for sale, if no other houses were to go on the market starting tomorrow, no one put their house up for sale, we would run out of houses available to buy in 1.1 months. 1.1 months. Now, this time in 2019, we were at 2.5 month supply, which is also kind of tight. But you can see, even from when we thought it was tight to what it is now, very, very tight. So that tells us there's a lot of demand for buying houses. This means your house is probably at an all-time record value. You can also see this in the for sale inventory data. So we saw that 5,095 number a minute ago that of houses that were available for sale, and that's reflected here. And you can see graphically how it was almost 10,000 homes for sale not too long ago. And the right side graph demonstrates the decline in inventory and the percentage dip. We're down 45.9%. Available. It's kind of like the whole paper towel and toilet paper crisis, right? You go to the stores, the shelves are empty. Well, the housing shelves have become kind of bare lately. It's the same kind of thing that's going on. So we're going to talk about those 6 strategies we promised, right? 6 strategies, proven strategies to be able to buy your house without a ton of stress. Make sure you got a new place to live so you're not having to move twice, and just the best way to optimize selling your house for its maximum value while you find your next home, because a lot of people are taking advantage of these historic low interest rates to buy up, even with the same payment. Many people are buying up. All right. First one, strategy number 1, contingent offers. I'm going to turn to Tiff White. Tiff, talk to us about contingent offers and how that works, what it means, and how it relates to this market here in October 2020.
Sure. Well, a contingency offer is one that means that you have a home to sell in order to purchase the home that you're making an offer on. In this market right now, that is a tricky predicament to be in, because quite a few sellers are just not in a place where they need to even consider that. And so it really puts you at a disadvantage to have a contingency. So that's kind of why we're even here today, to talk about other options, because I can tell you, gosh, out of the 20 offers that we've made in the last 2 weeks with my clients, 2 have been contingent, and they're really at the bottom of the pile when people are considering offers. It just means there's more risk, and sellers don't have to take that risk.
Yeah, that makes sense. And I see the chart here says, we talked about this 1.1 month of supply, and that would be really as strong of a seller's market as it gets, right?
Oh, absolutely. I've never seen anything like it.
And 6 months is what we consider a neutral market. So I think, when you have 6 months supply, that's when a contingent offer probably is more viable. So contingent offers aren't a bad thing, just probably not going to win your bid for buying a house in today's market, is what you're saying, right?
That's right. You're at a disadvantage. There's no doubt.
So let's talk about ways to overcome that disadvantage, folks. That's what we're here for tonight. Strategy number 2, iBuyers. So we've heard about, okay, this is an industry term, iBuyers or e-buyers, they go by different names, but the names are like Open Door and OfferPad. You've seen Zillow offers. You've even seen those We Buy Ugly Houses signs at every street corner and Knock and things like that. And there are different ones and they pop up all the time. Tiff, what I see is they'll offer, hey, stress-free, we buy your house in days and, makes it so easy. So I'm thinking for some people that might be the right way to go because they know for sure they got that house sold so they can go buy their new house. Tell us why that is or is not a good idea.
Well, our market is stress-free for a seller right now. So there's really no need to take this kind of step. I think maybe in other markets, it might be something that should be considered or may be considered. I can't speak for that. Like we just saw through those graphs, it's not a necessity. I mean, these companies certainly need to stay in business. They're expensive. They certainly undervalue your home. It's just not necessary. Our market is way too strong for this kind of scenario.
Well, as we have up here, there's a market analytics firm, Collateral Analytics, said that I think it was sometime earlier this year or late last year, that iBuyers cost sellers up to 15% of a home's value. And I guess, if you can sell your house in 6 days in this market for maximum price, why take a 15% haircut?
Absolutely. Absolutely. Right? Let myself and my team, a knowledgeable agent, go in there and we can get you much more. And it'll be just as convenient, if not more. So.
Well, and you know what? You bring up a good point because one of the other things that always comes to my mind is when folks are working directly with one of these buyers, they cut out the realtor from that transaction, if I'm not mistaken. Is that right?
They do, and they actually charge more for less services. So if you can believe that, they're charging 7 to 10% for their fees, where in our market, generally speaking, it's 6% all in for the seller, 3% to the buyer's agent, 3% to the seller's agent or firm. And then of course, on top of that, you'll get so much more. Just because we know how to market it, we know how to show it, we know how to set it up. These companies are bare bones, and they're really they're not a necessity, or they're not a need, they're not anything for this market. I think others, like I said, could be a value, certainly not in Charlotte.
So, and I guess the point I was trying to make, and I wanted to validate my understanding, and you I think just did that. When someone's selling a house and they hire a listing agent, that listing agent is looking out for their best interests. When one of these companies is buying direct without having representation, that company is looking out for their interests to get the best purchase price they can, versus a selling agent that's going to help make sure that they get the best sales price for their house. And so having you and your team involved, making sure you're optimizing your price, can actually go a long way to maximizing the money, to have more money to put down to make that next dream home affordable.
Absolutely.
So Matt Wise, I'd like to ask you to talk about strategy number 3. And this is, you don't always have to sell your house to buy your next one. Talk to us about that.
So let's talk about the strategy where you want to hold on to your existing house and have that as an investment property and purchase the new house. So there's a couple of things that you want to pay attention to when it comes to this situation, and reasons why it's so popular, especially right now. Because of the fact that rates are at their all-time low right now, and it's a fantastic time to buy a home, one of the things that people are doing is they are refinancing their existing primary house, and they are saving money on that rate and locking that in at a long-term low interest rate. So they have a low mortgage relative to the market on that house. Well, that puts them in a position, because rent prices are so high here in the Charlotte market, that they can rent out that property and have it cash flow and offset that mortgage expense and not include that in their debt to income ratio. And then now if they go out and purchase a new property, because once again, because rates are so low and it's such a good time to buy, they can get in at a low interest rate on the new house, finance maybe more than they plan to. Maybe their plan was to cash out the equity in their house, and you can still do that. And I'll talk about that in a second with a cash out loan. But it could be that you wanted to save up and then have a 20% down payment, transfer the equity from the first house over into the second house, like most people do. Well, it could be that, well, wait a minute, you see the opportunity with low rates. I'll just use tools like mortgage insurance and various programs to get into the new house that I want to, financing a lot because interest rates are so low, hold on to my old house, rent that property out. And there's a reason why you might want to do that. When it comes to qualifying for a mortgage on the second house, excuse me, not a second home, but the new primary house that you're buying, one of the things that we can do as a mortgage lender is we can use a lease that you have on your existing primary, the old house, we'll call it. We can use a new lease on that to offset that debt, and it helps you qualify for the new house. So all of a sudden now you own two homes, a bigger, improved house that's better for your family, maybe in a better school district, whatever the case may be. And then you have your old primary house that is now an investment house that's a cash generator and a wealth generator at the same time. And one of the mechanisms that people use, at the same time is to do a cash out refinance on that current primary and pull the equity out of that with a cash out refinance, because once again, rates are low and it makes it affordable. You can even do a cash out refinance and then have the same payment as you've been paying for the last few years and now have a cash in hand. Then you take that cash and use that as a down payment. You're borrowing that equity. And then maybe you want to put 20% down on the new house. And then you're still end up in that same position where you're in a good cash position relative to your equity. And then your old primary home is a rental for you that's generating wealth and income each month. And your new house fits the needs of your family better. Bigger, better school district, more bedroom, whatever the case may be for your individual situation.
So let me just walk through this. What you're suggesting is before you buy the new house, you do a little planning. You want to do this. So you're going to go ahead and refinance your existing home, pull an adequate amount of equity out for whatever down payment you want on your new house. So you can buy that, kind of look at market rent values, and then rent your old house out. Ideally, be cash flow neutral or positive on that. But even if it did cost a little, it's a decision you make about your budgeting process. And then you go and buy the new house, and you don't have a contingent offer.
So there's a question, and the question is, how long do you have to have owned the house before you can either pull cash out or decide to rent it and buy another one as your owner occupied home?
Yes. And that's 6 months, right?
Depends on the type of loan. Depends on the type of loan.
It
Depends on separately.
depends on the type of loan that you have, but generally speaking,
Yeah.
most people would be able to qualify for that cash out. And look, I mean, it depends. All of this is predicated on the equity position that you have in your current home. If you've only been living in that home for a few months, then that situation almost doesn't fit the profile. But if you've been in there for a few years and maybe your family has grown, your kids have gotten older. In the case, I'm doing one right now where it's actually a little bit simpler than that. Yes, they needed a bigger house. Yes, they wanted a better location. But here in the last month, there's a new problem. New neighbors have moved into the house beside them, and this new neighbors are 5 young men and with 5 cars. Now, as soon as I heard the story, I knew immediately what the problem is. Now, they don't want to part with that house. They like that area. They like that investment opportunity. They just don't want to live in that house anymore. They would like to pull renters in there and let them rent in the house and deal with the 5 young men next door. They'll just continue to own the house, and they need a bigger house in a quieter neighborhood.
Gotcha. And so I have a quick question. You can use the rental income to qualify. You don't, I'm thinking, oh, can I afford both houses? But if you're going to get the rent, you can actually use that income to offset the payment. So essentially, you're qualifying for your new house because you got that to offset, right?
Yes, and this is where I would advise you, this is where we come in and talk to us if that's your situation. Yep. And we can walk you through this numbers, because it's a little bit complicated. There's things we can and can't do. And that's when we want to really take a deep dive into your situation and go through your numbers. So
before we go to the next slide, Matt, I think it's really interesting, and thank you for going over that with us. You said earlier the words wealth generation, and it reminds me, so we do an educational series for new home buyers. It's focused on millennials buying new homes. And I know most of you on this own a home and are looking to move up. But, you know, in that we talk about the power of homeownership and how homeowners in America generate 44 times the wealth of renters. And, you know, one of the things we talk about is every month when you make your housing payment, you are generating wealth. The question is, are you generating for yourself or for your landlord? And this is an often overlooked strategy of cashing out, using that down payment to buy the new one and renting, because then what happens is now you're leveraging both properties and you're building wealth in 2 properties, except you're allowing other people to build that for you. Now you've got both sides of that coin. And that can be very, very rewarding. It's not for everybody, but it can be very rewarding and a really good strategy. So let's talk about strategy number 4. And Brenda, I would like for you to talk about this, selling and then getting a rent back. And we talked about a 59-day rent back, but you're going to talk about that and sometimes beyond, depending on the circumstances. Walk us through, what is this rent back idea? Why would you do it? How does it work?
So basically what this does is, you have decided you want to purchase a new home, but you own another house and you don't want to be without a place to live, because it is a tight market. It may take you a little while to find the house that you want to buy. Mm-hmm. So in this case, you can put your house on the market. You'll likely have a lot of activity and a lot of folks looking to buy it. So you are in the driver's seat. It's kind of an unusual time. So it's because you can pretty much ask for whatever you want. And one of the things you could ask for to give yourself a little more peace of mind is, hey, I want you to buy my house, but I don't want you to be able to move into it for 30, 60, maybe even, 180 days, depending on what your plans are for getting into that new home. So you buy it, you sold it, you've got the money. Now you just pay the new people rent for a couple of months until you go find your new house. And that allows you a little peace of mind. It also makes you a much better buyer for that new house, because as Tiff said in the very beginning, people trying to make offers on homes that are contingent on the sale of their previous home are just not they're not winning the bids. They are not winning the bids. I have a buyer who has been looking for 4 months. She's probably put in, I would say, honestly, 25 offers. They're great buyers, 20% down, the whole 9 yards, but they have to sell their house to buy. They didn't win one of those. So finally the agent said, let's put your house on the market. They put it on the market. They got 3 cash offers from investors who want to rent it anyway. So they took one of those cash offers. They're staying in their house for 6 months, and now they're out looking for a home. It worked out beautifully. Yeah,
and it's interesting because on the slide, we talk about 59 days. The reason we say 59 days, let's say someone's buying it, they want to live in it, and they're getting a loan. When you get a loan, typically you're promising that you're going to live in it, you're moving within 60 days. So oftentimes, the most you can get is 59 days. However, to Brenda's point, with the client she's working with right now, they actually had an investor buying it. They wanted to rent it anyway, so they didn't care how long they wanted to rent it. So there's all kinds of possibilities. Tiff, have you seen this happening?
Sure. It's all negotiable.
Right.
It's all negotiable.
So it's kind of like a unicorn because you're not real, you don't see them everywhere, because not everyone wants to rent it back. But sometimes they do, and it works out, and it takes that stress out of the process. You get that little extra time to go then make your purchase and to move in stress-free and very comfortably. So let's talk about strategy number 5. Delayed financing. Now this is a good one because I'm telling you, people overlook this so much. I talk to people in our industry and in the real estate industry all the time that don't know about delayed financing. And Matt's going to talk about it because actually Matt and Tiff just worked on a deal with delayed financing, and I think they both probably have some really interesting insight. It's not for everybody, but if it's something that's available to you, it's a great strategy. Matt?
So delayed financing is a program that allows you to buy a property with cash if you have it. And that's what this is about. A person who has the means to purchase with cash. You buy a property with cash, you close on that house. In most cases, that's a quick transaction. And then you have up to 6 months to go in and refinance that and pull 75% of your money back out that you put into that transaction. And a real world example of how this happened involves Tiff and a client of hers who went under contract. He's an investor. He purchased, he has a number of properties. He wanted to purchase this property. The reason they won the offer on the house and the reason they got the house is because it was a cash offer. And then once he made that offer, he decided, well, wait a minute, rates are great. I want a loan against this. What can I do? And so, of course, he came to me, and we didn't want to mess up her transaction because it's a cash offer and it was closing in a number of days. So we sort of stay in the background, wait until all that is done. And then once that transaction is completed, we went in and now he pulled back 75% of that purchase price. You've got to get an appraisal to make sure the appraise is just like a purchase would. If you're getting a loan, anytime you are purchasing, a property, you need an appraisal.
Well, Matt, let me just clarify that you don't need it if you're buying with cash up front. You need it when you go to do delayed financing. So
you're muted.
You can close. If you got the cash when it closes in 5 days, you can, right?
Can everybody hear Daniel?
I can.
Okay.
Okay, I'll repeat because it sounded like I was talking. The appraisal, you don't.
Yeah.
When you buy cash, you can, if you want to buy cash and close in 3 or 5 days to make yourself super attractive in the bid, you can. You'll just need the appraisal when you go to get the money out through the loan.
Yes.
Right. I'm talking about the loan transaction where you're doing the delayed financing.
Just wanted to clarify the timing of it.
Yeah, just like any time you're getting a loan, you're most likely going to need appraisal. So we went in and got the cash back out from this property, and that's one of the mechanisms that you could utilize. Delayed financing is a handy tool. Once again, it is only for the person who has the means to buy that property with cash. And let me give you another example because it's one that I've seen in the past. There might be someone that has a house that they own free and clear that maybe they have a home equity line against, and that they already have that ability to borrow against that just sitting there. And let's say that they own a $500,000 house. They have some assets too. They want to go and pull that and make that cash purchase. You can do that. They want to upgrade their house and they have the means. They can pull from that equity in the current home that they have, go and do that, and then pull the delayed financing later and get some of that cash back. It's just another tool to be able to sort of, put yourself in a position where you can get a house in this market and upgrade your house.
Got it. And I think, Tiff, when we talked earlier today.
Oh, yeah.
What was the number that you said on
53.
the real life example where the gentleman?
Yes, so we set an all-time record. The gentleman, the client that Matt is talking about, he is an investor client, and I've helped him purchase several homes here in the market. And this home, we won out over 53 other offers. And set a record with anyone I know, and I've been in this business quite a long time. But it's something to be a little bit proud of. It's not just the cash offer. There's certainly a lot of other terms that are involved to win it. But with our team, the team that you all see right here, it's certainly, we're lining you up for the best chance possible to get the home that you need, love, want, and with as much convenience and cash in your pocket.
So that leads us really to strategy 6. Okay. So the reality of this is, and there's been a theme so far. Okay. No contingencies. If you've got cash is king. People want, that's a certainty, right? So this delayed financing is if you have the cash, you just don't want to use it, but you're willing to use it temporarily, you use it, and then you get other people's money back at historically low rates, great. But let's say you don't have that money sitting in the bank to use temporarily, okay? Not everybody does. And that is where the next strategy, final strategy we're going to talk about today, ribbon, comes into play. And this is so phenomenal. And I got to tell you guys, ribbon's only in a few states. Okay, we're lucky. They're very highly focused here on Charlotte and the Carolinas, North and South Carolina. I talked to colleagues in other states who don't have a ribbon. Okay, so we're very, very fortunate. With ribbon, you become a cash buyer, even if you don't have the cash. You don't have contingencies, but you're also using someone else's money, other people's money, right? So let's talk about the next part. You're selling your house either before closing on your house or after you close on the new house. Doesn't matter. 2 different options. We'll talk about it. No pressure. You take that pressure off, right? It also allows you, let's say you're like me, 3 teenagers in the house, right? I mean, I don't know what we would do if we put our house up for sale, because we can't keep it clean for an hour, much less, a week. So showing our house, if it was up for sale, would be a nightmare. It would never look its best, right? So, to get the maximum price, you got to optimize, you got to have stage, you got to, declutter it, whatever, just make it neutralize it, right? So this also allows you to buy your house because you got cash to buy it, and then you can stage your house, you can keep it unoccupied, whatever, and that helps you get the maximum value. This program works up to a $700,000 purchase price. And the reality is, we talked about those iBuyer sales earlier, and that study said that people give up to like 15% of the value. That's definitely not worth the cost for that certainty when you've got ribbon available, and our market has it, not everyone does. And it's less hassle than moving twice, right? What it does is it provides certainty, peace of mind, and no pressure. And we just think it's terrific. And we think we're so fortunate to have ribbon focused on the Charlotte market. Ryan, tell us, I've kind of given some of the benefits, but can you just tell us what ribbon is and kind of give us an overview of it? Who is ribbon?
Absolutely. Thank you so much for having me on today, guys. Great team here to help make the transition from an existing house to a new house as easy as possible. So what is ribbon in a nutshell? I want you to almost think of us today as your rich uncle. Okay. We are here to give you access to our cash. And the reason for that is what we've mentioned before on this call, right? We understand there's challenges. You most likely need to sell your existing house in order to buy your new one. Obviously, a home sale contingent offer in this market is just very troubling and hard to compete in order to win your dream house. Plus, the thought process, if you're on the call today, might be, I'm willing to list my existing home and I know it's going to sell quick, but how do I go find my next house and perfectly time up both sales? What I really want you to take away from this call is our business and what we do to help you really doesn't change from what it would currently look like without ribbon. You're still calling my TruLoan to obtain your qualification letter. That's a very important piece of the puzzle when working with us. You're still leaning on Tiff as your real estate agent to help you with your home to buy as well as your home to sell. That's one thing that we believe big in, which is agent representation, as well as your choice of lender here when leveraging the ribbon program. All that to say, we want to just give you access to our cash so that transition from selling and buying is as easy as possible. As Daniel mentioned, there are 2 product options that we have for you and your specific situation. Okay. And we can go to the next slide, Daniel. Part of the reason for the two different options is, sellers really come to us with two different mindsets. And Tiff, we can lean on some of your experience here to talk through these. But what I see a lot of is, as Daniel mentioned, some sellers come to us and they say, Ribbon, you know what? My existing home to sell, I've got 3 kids, I've got a dog. I just don't want to deal with the showings. It's going to be stressful in trying to sell this house. I'd rather go get into my new house and then work on selling my existing home. Essentially buy and then sell. It's definitely an option for you. Or I'm a seller that says, hey, my existing home to sell is in tip-top shape. It's staged, it's clean, it's ready for top dollar max value. I just need some help on winning my contract on the new home because of the home sale contingency. So you still have the opportunity to time both sales, lean on TIF to enable you to write a cash non-contingent offer on the dream house. And if you can secure your own financing on closing day, okay, with my TruLoan,
Meaning, in likelihood, if you don't mind me, meaning by the time they're closing a new house, they actually did sell their house and they got their money, right? So they don't need you to come to the table with cash. They got the loan, right?
Exactly, because you sold your existing home and you have now access to your proceeds, which are necessary to obtain financing on the home to buy.
Yep.
Exactly. So on my screen, you can see that is an option for you. We consider it our offer upgrade product. Okay. That is 1% of the contract price in the event that you utilize our service. So for 1%, starting today, you can upgrade your offer to a cash non-contingent one, which dramatically increases our opportunity to enable your offer to stick out among the rest. I think
Which is the deal of the century, I've got to tell you, because our offer will be top of the pile out of the 5 offers that are received this weekend on my listing. If I got a cash non-contingent offer, you're looking pretty good.
So, and I'm going to clarify that, Tiff, because look, a lot of folks on this call today, they're highly qualified buyers, right? It's not like they're iffy. Most people on this call they're very qualified. They've got equity, they've got good credit, so they've got this pre-approval letter from us that's great.
Just as good as cash.
Except in the buyer's eyes, it's not, because cash is cash. There's no worry about will the loan actually happen. So what you're telling us is anytime there's a cash offer among the 3, 4, 5, or 53 offers, the cashiest offer, the no loan offer is going to be the one that you're going to gravitate toward, because it provides certainty for the seller that the sale is actually going to go through. Is that right?
That's correct. The risk is absolutely the least out of any of the other options that we see when we have contracts coming in. So Ryan's company, Ribbon, is just a wonderful thing to consider and utilize, and it's easy as far as the buyer is concerned. There's really nothing on them. I actually call Ryan. I could text him or call him at 8:00 at night if we're ready to make an offer. There's a simple addendum that's included. I would make sure that the seller's agent would know and be aware of Ribbon, and most people are, because it's such a wonderful product. Yeah. And that's really it. So it's really all on myself and Ryan. There's nothing else the buyer needs to do.
So Ryan, before we go to the next slide, I just want to extend your rich uncle comment. What this first option means is I go to my rich uncle and say, hey, Uncle Ryan, Uncle Ryan, I want to buy this house. I need a loan. They're not going to take my offer, or I'm afraid they might not. And I don't want to have to go through 7 houses making offers to finally get one to the table. Will you back me and tell this buyer that you're just going to supply the cash so there's no loan, but I'm still going to try and get the loan in time? So I won't need your money, but I'm going to give you 1% to leverage your ability to come through, because you will, as a cash offer. That's essentially what this is, right?
You nailed it. I think Tiff really hammered it home too when she's mentioned this in front of different seller buyers, where really in this product option, it's almost like an insurance policy, right? Yes. Where, hey, if you can't access your mortgage, here we have the Ribbon safety net to catch you and reserve the new house for you. We don't, TIF is going to work very hard to time up both sales, right? There's no guarantee in this market. It's definitely challenging, but that's why it's so important to have a rock star team helping you along the way to try and accomplish this. And it's something that we can do in order to take advantage of our pricing, but also in order to help you win the contract on the home that you would like to purchase. You nailed it. Exactly.
2.5 years ago, my mother, we were helping her look for a new condominium. And that wasn't even this market. It was good, but it wasn't even like this market. So we lost 7 bids. 6 of them, we were told, or 4 of them, I'm sorry, we were told it wasn't that we didn't have the highest offer because we started overbidding, It's because they chose a cash sale. I mean, I wish I'd known about Ribbon back then. We would have saved 4 months of our lives to know how to play it. So, all right, let's just talk now. We talked about this first option, Ryan, in the context of we use you to back us up for the cash offer, but then we don't need it because we sell our house and we have it. Let's talk about the other way. We either don't sell our house in time, or we never intend to. We want to move out, stage it, no pressure, get ready, And so what's that option?
Yeah, it's a great call. I would say this really depends on your situation. There are some folks that really work hard to time it, but you're just unable to, and that's okay. We'll still step in and reserve the house. If you're like Daniel mentioned, which is, hey, you know what? I really don't want to deal with showings, and through a little bit of work, I might be able to sell my existing home for even more money if I put new carpet in, if I paint my walls, right? If I make a few upgrades that can increase the value of your home and get with TIF on those items, so you're making sure you're correcting the right things in your house that can, enhance your value. Then Ribbon can say, all right, let's go use a cash non-contingent offer, win the new house, win the contract, as you can see on our screen. Your offer gets accepted. And now on closing day, Ribbon uses our cash to purchase the home on your behalf. You could then physically move out of your existing house into the new one. Now it's vacant. Mm-hmm. You would then rent the house from Ribbon, and you have up to 180 days or 6 months in order to sell your existing home on the open market with TIF for as much as you can. As soon as you even get a contract on your existing home, you're calling Ribbon and saying, hey, we got a contract. We're super excited. It's set to close December 10th. We're high-fiving at Ribbon. We don't want to have to hold the home for you longer than necessary. We'll then line up your new house to be bought back from us to close, if not the same day, the very following day, December 11th, and you would buy it back for the exact same price that we purchased on your behalf for. So we do not upcharge the home, and now the keys are yours, and you've transitioned from your existing one to your new one. You've gotten the house you wanted, and you sold your existing one for as much as possible.
Yeah, that's so good. So the ways you can use this, yeah.
It's such a great option. That's why I'm glad to be part of this, because our market is wonderful in so many ways. But as we have seen, the list side is, right now, less than a week to maybe get it under contract. But I can promise you, the buy side is longer than a week. Right. And so that's why we need to have these options. And so I'm really happy that we're informing and giving people lots of things to think about.
Well, the other thing that I know we've seen clients have is they have a market analysis done of their house. In its lived in, personalized, kids and pets condition, like our real lives are. And they're told, listen, if this house was staged or was empty or had less stuff, or you could move out and you could, we could do this, that, or the other, and say, they want you to, like Ryan said, paint and carpet, whatever. Let's put $3,000 in, and we can get it in perfect neutral show condition. It's gonna be worth $12,000 more.
Right.
You bet. I mean, our market is a move-in ready market. We have a very high relocation population. They literally want to unpack their bags, and so they will pay for that convenience. So if the seller is in a position to be able to paint new carpet, get it staged so people can see, how their life can be, they will absolutely. The sellers are going to make out on that.
And would you say often that is 3% more, which basically covers the cost of the ribbon and makes their whole move experience easier and less stressful?
I would say it's a win all day long.
Yeah.
You know, I am a big believer in ribbon. I think it is a wonderful service and product. I really do. Our market calls for this kind of thing.
And I will tell you, we've seen clients do it, and the question that I had at first was, okay, what's this rent gonna be? And everybody was like, oh, that's completely reasonable. It's just, you know, normal rent for that house. I mean, I think, Ryan, the rental rate that you guys established is really just covering the cost, the taxes, the insurance. I mean, that's not a big profit generator. You're just looking to, you know, make that so that they can cover the cost until they complete the sale, right?
Exactly right. We partner.
Generally,
You got it. Yeah, it's really, we don't see it as a revenue stream on our end. What's also great about this program, you know, for those on the call, is we're very transparent in what we do. Okay, so when you work with us, there's no hidden fees, there's no gotcha moments. It's totally free to go ahead and log in as a buyer underneath TIFF as an agent, along and upload your pre-approval letter, right? In order to see if this option best fits your needs. You will know exactly what the rent would be before you ever decide to move forward with our program. And that's just our value add to make sure you feel comfortable in making the best decision for you financially.
yeah. So guys, it's terrific. And Ryan, I appreciate you taking the time to explain it. I just want to go back real quick and review the strategies we talked about before we wrap up. Number one, contingent offer. Great strategy when the market is appropriate for it. Right now, terrible given the seller's market we're in. It's hard to get a contingent offer accepted. Brenda gave a good example of that. Second strategy, iBuyer. Not worth giving up to 15% of value. You don't need to. There are other options. Number three, take some of the equity out of your house, use it to buy your next house, use the rent on the old house to offset it, and build wealth by owning two houses. It's not for everybody, but if that's something you're considering, it's a great strategy. Number four, sell with a rent back period to give yourself a little time, cushion time, to then buy your next house. Strategy number five, got a nest egg of cash that you can use to buy the house with cash, but that's not really where you want your money to be. You still want to get that cheap loan at such low rates. There's a great process called delayed financing. We talked about that. Allows you to be a cash buyer and win the bid. Don't have that money set aside? Use your rich uncle. His name is Ribbon, otherwise known as Ryan Lance. So I really do appreciate this for our panel, Brenda, Matt, Tiff, Ryan, terrific. Folks, we're going to send out the email in a little while. Please, one thing we didn't talk about really a lot was if you're thinking about exploring this, it costs nothing to go through the process to analyze it, find out what your house is worth, find out what you could afford every day. We're having people come in. Whereas a few years ago when rates were a little higher, we had people come in, wanted to get pre-approved, and they wanted to buy more house than they could afford. Every day we're finding, because rates are so low, people are astonished they can buy more house than they realize for the same payment as they've got. And most people can afford more than they're actually buying because rates are on sale. Okay, so that's just the reality. So it costs nothing to go through that process, figure out what your options are. You may decide, you know what, we're going to stay put, we're not doing a thing. You may decide, hey, this makes a lot of sense. Now I know how to have a stress-free way of moving into our next home. And we want to be a part of that process with you and your home buying journey. So again, thanks everybody. Matt, Brenda, Tiff, Ryan. We'll have everyone's contact information in a follow-up email. We look forward to working with each and every one of you. We'll also be posting this video that we recorded on YouTube, and we highly encourage you to share it with your friends, family, neighbors, and loved ones who may also benefit from this presentation. Thank you for spending your evening with us. We appreciate it and look forward to working with you soon.
Thank you.
Thank you.
Thank you.